The opinions expressed on the following program are not necessarily those of the staff, management, or advertisers of this station, and any investment advice given is for educational purposes only and may not be suitable for all investors. Joey Gilbert is a registered representative with Newport Coast Securities, Inc., a broker-dealer and a member of FINRA SIPC. This document should not be regarded as an offer to sell or as a solicitation of an offer to buy any securities. Specific recommendations can only be made upon request of the client after a full review of their suitability has been conducted by the investment representative. Risk tolerance, ability to withstand loss, diversification, and level of understanding are important factors in determining appropriate investments. Past performance is not a guarantee of future results.
And now, Newport Coast Securities is proud to present How to Invest in a New America with your host, institutional equity strategist, Joe Gilbert.
Make money when you get onto the battlefield of the stock market. I believe the best investor is an informed investor. Hi, everybody. I'm Joe Gilbert, an institutional stockbroker with Newport Coast Securities here in Irvine, California. How's everybody doing on this beautiful, hot Monday afternoon? This is a call-in talk show, and the lines are open. If you have a question about a stock or the general market, you can call me at 866-584-3434. My main goal is to cause my listeners to question some of the opinions and investment beliefs you might be using right now or that you've heard about in the past. It's truly amazing the amount of bad information that goes around about how the market actually works and functions and how to be successful in stocks. What you hear on this show will be very different from what you hear on other shows. That I guarantee you. For one, most of the information I'll be discussing can be researched further by getting the book, How to Make Money in Stocks, A Winning System in Good Times or Bad by William O'Neill. That's number one. So everything that I'm talking with you about in this show will revolve around the CANSLIM method and how you can use it as well as Investors Business Daily every day to get better educated. I've used this method for over 25 years, folks. That's half my life. And I know from firsthand experience the system works, and it can help you if you're having a rough time with this market. This CANSLIM method can help you to better understand how the market works and how you can be successful at stock speculation. So every day, that's what you'll be hearing from me. I'll be talking about high performance techniques and strategies, as well as buy rules, sell rules, and general market rules. Professional, detailed information about how the stock market actually works and functions. Now, I've been doing this show on and off for the past 20 years. Haven't done this show in over a year and a half, so today's my debut here in Southern California. I want to encourage all my listeners, listen, you can learn to save and invest profitably in stocks. Anyone can do it because we live in the greatest country on earth. That's not my opinion, friends. It's a fact. What I'm about to tell you about our great new America, I can almost guarantee you won't be hearing on the national news tonight when you get home. But the reality is we live in the greatest country on earth. That's right. I don't care about Europe or North Korea or all the problems we have. The fact is that America leads the world in so many different areas. Think about it. We lead the world in so many different areas. We're the most productive country on earth. We lead the world in high technology, not just in computers and microcomputers, but in software as well. We have more Nobel Prize winners than all of Europe and Japan combined. And we're the world's leader in medicine and in biotech. We lead in military capabilities as well. All true, friends. So America is the greatest country on earth. But the national news won't be talking about this tonight or on any night. All they talk about is all the problems we have and what's wrong with our great nation. But most importantly, and what I want to focus on here on how to invest in a new America, is the United States leads the world in creating new, innovative, entrepreneurial companies. This is the rarely promoted and hardly talked about new America that I want you to learn about on my show. Because every year, the stock market serves up new big winners. Again, every year, the stock market has big new winners. The only question you need to ask yourself is, will you see them and recognize them and know how to take full advantage of them for your own account? Now, that's what I want to focus on the show. The focus of my show to be about, ladies and gentlemen, is how to. Okay, this is very important. How to. I don't want to give you stock tips. I don't believe in taking stock tips. And I strongly discourage anyone listening right now who's taking tips, don't do that, okay? Don't be a tip taker. What I want you to learn on how to invest in a new America is how to invest with real knowledge and confidence, okay? At the very least, friends, you really need to understand and learn the sound principles and proven rules and methods that can protect and build your investment portfolio over time. Make sense? Because listen, after the last 10 years have been one of the worst 10-year periods in history. From March 2000 to March 2009 was an absolute unmitigated disaster for most investors, especially if you didn't have sell rules and you were just a buy and holder. So the past 10 years have left most people, including a lot of you listening to me right now, completely demoralized and shell-shocked. So you don't want anything to do with the stock market, and you're probably sitting in cash on the sidelines, watching literally as a parade of financial opportunities pass you by. That's why I think right now is the time to take hold of your financial future and start educating yourself so you can be armed and ready when the next group of big winners show up in the stock market. And with the market currently experiencing a correction, today was the second day of a rally attempt, but the market's experiencing a well-needed correction right now. That said, now really is the perfect time to learn something new. Now, here's something to think about if you're not doing too well in the stock market. At the beginning of the show, I told you definitely can learn to do this. It starts with an overwhelming desire to improve. So with that in mind, let me ask you, how much time do you spend every night and on weekends looking at stock charts, reviewing the action with the goal of having a very strong list of buy ideas? I spend a fair amount of time every night doing just that. And I spend a fair amount of time on my weekends also looking through thousands of stock charts, trying to find timely ideas for my clients. Are you spending enough time doing research and studying the market? I firmly believe this. It's the time you spend after 9 to 5 every day and on weekends that'll ultimately determine your performance on the battlefield. And let's face it, friends, the stock market is a battlefield, okay? So here's something to think about that you might not believe, but it's absolutely true. There is no luck in the market. You either know what you're doing or you don't, and it shows in the returns you get. Now, most people miss out on the biggest winners in the market for several reasons. The biggest reasons most people miss out is lack of knowledge, no discipline, no real rules or guidelines to operate with, and also fear is a really big issue. So I want to help you with this. Remember, America is the world's leader in creating new companies, and the opportunities are out there for everyone. That's why I call it a new America. Now, nobody can tell you that the past 10 years haven't been horrible. They have. But you can't argue with the fact that there have been many, many opportunities to have huge winners in the market, almost on a yearly basis. You could have made huge money in Google, Apple, Netflix, Green Mountain Coffee, Chipotle Mexican Grill, and dozens of others, okay? The new America cycle is alive and well, and every year there'll be new big winners. Listen up, friends. Having used the CANSLIM system for so long, I can unequivocally recommend to all my listeners, if you haven't read the book, How to Make Money in Stocks, A Winning System in Good Times or Bad, by William O'Neill, you're making a huge mistake, okay? If you want to improve your results in the market, you need to go get this book and read it. How to Make Money in Stocks by William O'Neill. Now, I've used this system for 25 years, and this is going to be the focus of what I talk about here on How to Invest in a New America every day. I've spent over half my life in the market, in the day-to-day battle, watching things, and I can tell you, if you don't have a system or a set of rules, the market will chew you up and spit you out, okay? And I've spent over 10,000 plus hours alone just over the weekend looking at stock charts. And I learned to operate with a sound strategy based on historical models very early in my career. In fact, from 1989 till 1998, I attended more than 23 Investors Business Daily Advanced Workshops. They were all-day seminars taught by William O'Neill himself, as well as three-time U.S. investing champ Dave Ryan. I can't tell you how much I learned attending all those seminars, and I've spent my entire career trying to continually improve on my stock market weaknesses. Listeners, I take investing very seriously, and I spend a huge amount of time every day and on weekends studying and doing my own research routine. I'm a completely independent stockbroker. I don't listen to analysts. I don't read newsletters. My company doesn't tell me which stocks I can and can't buy, and I don't have any products to sell. My work is completely my own, and it's institutional quality. Seriously, friends, I'm an executing broker for some very large hedge funds as well as smaller individual clients, but I execute trades for some very large nine-figure fund managers, and I provide them with directional market analysis based on my own thinking and research. Now, the directional market analysis I provide is completely technical in nature, and it involves interpreting the price and volume movements of the market itself. So if you find yourself too busy and time challenged to put the necessary time in it takes to be successful, and you want to work with a stockbroker who's doing the research and watching the market all day, I can help you to execute your orders and help you navigate the ups and downs of the market, as well as give you expert guidance, okay? Think of me as your new coach, if you will. If you're having a tough time and you want to work with an experienced broker, I've been active in the market every day since January of 1987. That's more than half my life. And most of the things I'll be talking to you about, I've practiced as a daily routine for more than half my life, okay? So listen, friends, routine is critical if you want to develop stock market intuition. And I believe in market intuition, and I definitely believe intuition can be developed. So what is intuition, you ask? Well, in my view, intuition is nothing more than repetitious application of expert knowledge. So if you need a new broker and you want to experience some fresh thinking and new ideas, you can call me personally at 888-668-9562, or you can log on to my website at howtoinvestinanewamerica.com. Now let's talk about how I can help you to do better and get you on the right track. All right, the lines are open. The number to call is 866-584-3434. If you have a question about the general market or a specific stock, you can call 866-584-3434. Now, here's something that I want all my listeners to consider if you want to cut down on the mistakes you're making and improve your timing. How many of my listeners really understand how to interpret a stock chart? Do you know how to read a chart? This is an absolutely critical skill that you simply must learn to use. Now, if you're not looking at charts, in my view, it's totally and completely unacceptable. You simply have to learn how to interpret daily, weekly, and monthly price and volume patterns. Why? Because it's an invaluable tool that most of the very best professionals use. Also, once you study the charts of what the biggest winners in history looked like, you can clearly see that they all formed very definite and recognizable chart patterns. Now, knowing this information can give you a huge advantage. I can't overemphasize the fact that you need to learn how to read charts, ladies and gentlemen. And once you learn to do this with practice, recognize these chart patterns, which in effect tell you when a stock's under professional accumulation. My skill level's off the charts, okay? I can just look at a stock chart and tell you if it's strong and under accumulation or if it's weak and should be avoided. Now, if this is a skill you have a strong interest in developing, I'll be holding free seminars at my office in Irvine every Saturday to help you gain a better understanding of how to read charts. You can log on to my website for more information and sign up for a free Saturday seminars as well as a free model book, too, at howtoinvestinanewamerica.com. Listeners, charts plus earnings will help you to tell which stocks in general markets are the best and stronger markets from the riskier stocks and markets that you must avoid altogether. You know, a good clear picture is worth 1,000 words. That's why I want to help you to learn to read charts. It's a skill, but with practice, it's a skill you can learn, and it's a skill that might just change your whole life, okay? Now, I'll be doing free seminars every Saturday to help you with this critical skill. Listen to this, friends. William O'Neill says in his best-selling book, How to Make Money in Stocks, on page 6, he says the first step in learning how to pick big stock market winners is to study the big leaders of the past so you can learn all the characteristics of the most successful stocks. All right, we're going to take a quick break. Remember, the best investor is an informed investor, so stay with me for more learning after a quick break on how to invest in a new America. I'm Joe Gilbert. I'll be right back.
Investors, do you know what a successful stock looks like before it has a dramatic rise in price? Knowing what to look for can definitely give you an edge. Hi, I'm Joe Gilbert, an independent institutional stockbroker with Newport Coast Securities and host of How to Invest in a New America. For nearly a quarter of a century, I've focused on a strict discipline of looking through thousands of stock charts every weekend looking for timely ideas for my clients. If you believe in the importance of a disciplined approach that combines new ideas managed with passion and focus, then call me at 888-668-9562 and experience true full service at very reasonable rates. Again, if you're looking for a new broker who can help you navigate the ups and downs of the market and you want experience, discipline, passion, and focus, then I'm your man. I've been using one system for 26 years. That's more than half my life. My direct helpline is 888-668-9562 or log on at howtoinvestinanewamerica.com. I'm Joe Gilbert, encouraging you to get educated and go for it. Securities offered through Newport Coast Securities, member FINRA, SIPC.
This is Financial News and Talk.
Markets, business, and the latest information. On Bloomberg, there's absolutely no alternative.
AM 1450, AM 1510.
Investors, do you know what a successful stock looks like before it takes off in price? Studying models of past big winners can give you a much clearer picture of what to look for in future big winners. Hi, I'm Joe Gilbert, a stockbroker with Newport Coast Securities in Irvine, California. How are you going to know if a stock you're considering to buy right now could be a future big winner if you don't know what these great winners of the past look like? Make sense? Call me at 888-668-9562 for a free copy of my model book I call Profiles of a New America. If you're unhappy with your broker and you want to work with a new broker who has 27 years of battlefield experience, as well as some fresh new ideas to help you get back on track, then call me at 888-668-9562 or log on at howtoinvestinanewamerica.com. If what you're doing isn't working, then try my fresh new ideas and a great new system. And don't forget to tune in every day for How to Invest in a New America from 4 to 5 right here on Financial News and Talk. Newport Coast Securities, member FINRA, SIPC.
Best equity, California. Every day from 4 to 5 here on Financial News and Talk. I'm going to talk about topics that all my listeners can use to put the odds in their favor when investing in the stock market. Now, today I want to talk to you about some better ways of going about selecting outstanding stocks. I want to cover 7 things you can use to select future potential big winning stocks. Stock selection criteria is critical if you're trying to ferret out the very best stocks. Now, I'm going to show you a great way today. Now, it doesn't matter if you're a new investor or if you're highly experienced. I strongly believe we can all definitely learn to materially improve our results. Using faulty selection criteria is one of the main reasons most people miss all the big winners. Do you have a blueprint of exactly what to look for in a good stock investment? I've got a lot of information to cover today, so let's get to it and see what we can learn. I want to start off by saying that most of the information that I'm covering about stock selection can be researched further by getting the book, How to Make Money in Stocks, A Winning System in Good Times or Bad, by William O'Neill. That's number 1. All the information I'm covering today can be studied in this book, How to Make Money in Stocks, A Winning System in Good Times or Bad. Now, the CANSLIM system that William O'Neill developed and describes in great detail in his book was based 100% on building models of every single stock that was an enormous winner from 1953 up until today. The system isn't based on anyone's personal opinions, and it's definitely not the opinion on anyone on Wall Street. It's based 100% in historical precedent. All right, he created a set of rules based on what actually works, cycle after cycle. That's first off. Now, these rules I'm going to talk to you about today are all based on how the market has functioned and worked, and there's no academic theory here on how to invest in a new America. Only facts, all right? So each letter in the words CANSLIM stands for one of the 7 common characteristics of all the biggest winners in history. Now, this is fascinating information, friends, so listen up, okay? Remember, all the CANSLIM criteria showed up over and over again in winner after winner. So it's really important, don't you think? Now, the first item in CANSLIM, the C, stands for current earnings per share. William O'Neill's study of the greatest winners found that 3 out of 4 of the biggest winning stocks were growth stocks, and that the average increase in earnings was about 70% in the current quarter when compared to the same quarter a year ago. And what you're really looking for is 5 to 7 quarters of earnings up a material amount. And by that, I mean a minimum of 25 or 30%. Again, what you're really looking for is 50, 100, 200%. Huge earnings increases. Something dramatic going on. Are you with me on this? Because you're basically looking for the very best companies that are in the top 1 or 2% of the market. Now, sales are also an important factor. I want to see the sales paralleling this. I'd like to see either the quarterly sales show the last 3 quarters accelerating, and they can accelerate from any point. It can be plus 5%, plus 20%, plus 30%, but that's an acceleration so that the sales are improving. Listen, friends, if they're not accelerating, they ought to be up a minimum of 25 or 30%. Now, this is critical. You want as many positive things as you can get. Make sense? You don't just want 1 or 2 things positive when you're picking a stock. Seriously, successful stock selection isn't a matter of having 1 or 2 items correct. It's a matter of having 18 or 20 or 25 items that are all highly positive. And the more of these positive elements you get, then the greater the probability that you're going to get into the next Microsoft or the next Cisco. You follow me? Remember, these criteria existed in all the biggest winners in history. When you look at the models, you'll see this over and over again. When you review some of the examples of the characteristics of truly the greatest stocks that make huge amounts, it's big current earnings and sales. Now let's look at the A in CANSLIM. That stands for annual earnings increases. You don't need to have 5 years up. That'd be better. But what I want to see is the last 3 years annual earnings record should show a growth rate of at least 25% every year. Now this is a very important minor detail. You want each year to be up. You don't want 1 year to be, say, $1 and the next year 90 cents and then the next year maybe $1.50. That'll show you a great growth rate, but it's not consistent. You want each year to be up. And that can be anywhere from 25% growth rate to a couple 100% growth rate. There are companies out there that are growing 100 or 200% a year. Not a lot, but remember, what you're looking for is only the top 1 or 2%, the very best of the best. In addition to the annual figures, you want the return on equity to be up at least 17% or higher. And it's good if it's accelerating over the last few years. In other words, 14%, 18%, 24%. But really, we'd like to see the return on equity be 25 or 50% or more. Remember, return on equity is another extremely useful measure of the profitability of a corporation. You also want to see the pre-tax profit margin and the annual pre-tax profit margins improving. So you want all the measurements of profitability that you can get your hands on. Make sense? So there's the C and the A, and you want both the C and the A. A great way to find companies that meet this criteria, the C and the A, would be to look at the earnings per share rank in Investors Business Daily. Now, with respect to the C and the A in CANSLIM, you don't want one or the other. All right? You want the long-term record to be sound, and you want the current and recent record to be strong and accelerating. Everybody got that? All right, so the N stands for new. Now, this has always fascinated me because this is at the core of why stocks do well. You got to have something new going on. Absolutely critical. Almost all these great winners had some new product or service that was better, okay? It's not the old America anymore. It's not the old companies. It's not the DuPonts and the government motors. That's the old America. It's the new America. New companies with new products, new services, new technologies, new concepts. New. In other words, hey, the first thing you want to ask is, what do they have that's new and far better? All right? Have they got some new gadget that saves a lot of money or saves a lot of time or works a lot faster or enables technology to function better? But new, okay? And the other part of the new is the stock should be close to or at a new high in price. Now, here's where we get into some trouble or some of the unique features of CANSLIM. Remember, this isn't based on anyone's opinion, and it's most certainly not the opinion of Wall Street. Because what do you hear out there on Wall Street all the time? You hear this over and over again. The stock's too high. The PE's too high. One thing you're going to learn when you follow CANSLIM is that PEs are meaningless. And I don't really look at the PE too much. They're totally irrelevant. Now keep an open mind with me, friends. I'm sure many of you have had a long-held belief that I won't pay more than, say, 20 times earnings for a stock, or if I'm going to buy a growth stock, I want it to be growing at, say, 30%, and I want the PE to be below that. Well, ladies and gentlemen, forget the PE. Listen, I'll tell you why. Let's look at the baseball world. Let's look at the New York Yankees. Now, they've won lots of World Series, right? And I'm sure they've got a few ball players on the team they pay several $1 million a year for. Now, would it be sound for us to say, listeners, well, that guy that's making $5 million or $7 million a year or whatever it is, that's ridiculous. It's overpriced. The PE's out of line. Nobody should be able to make that kind of money. So let's don't have somebody like that on the team. See, the real secret is the price of stocks and the price of ball players are determined by exactly the same thing, the law of supply and demand. There's only so many people that hit 300 or that hit 40 or 50 home runs, and they can calculate exactly what they're worth. There's only so many pitchers that can win 20 games or that can be consistent and have a low earned run average. So the numbers are there. Listen, they can even calculate the attendance so that they know when a certain pitcher pitches, they're going to pull 15,000 more fans into the ballpark. So those salaries are exactly where they ought to be, and those PEs are exactly where they ought to be. Make sense? A stock sells at a price-earnings ratio that it ought to based on supply and demand at that particular time and point. Now, sure, if stock gets into trouble and all of a sudden they stop growing or they have some problems, yeah, the stock's going to come down and the PEs will start to change. But as long as the company continues showing growth and the progress in leadership, it'll have a PE assigned to it based on its value. So to say that a stock is overvalued and this is undervalued is contrary to everything that I'm talking to you about, okay? Now, obviously, there's a point where the PE gets to be too high, and I can show you some other ways of looking at that, but here's how I've been taught to look at PE ratios. Now, I look for a stock chart that's right, and it looks like it's under accumulation, and it has all the earnings and all these CANSLIM and other variables and a lot of sponsorship, big volume. Everything's there. And they're in a leading industry, and everything's accelerating. So I've got 20 or 30 positive points. Then all I need to do is time myself into the stock. Now, when I think it's the right time, everybody with me on this? So I'll look at a PE as it's coming out of the base. And when it's right at the pivot point, based upon the models, the average leader that has a big move expands its PE by 130% from the buy point. So here's another little detail, friends. The models showed the PE ratio expanded throughout the course of its move by 130%. So whatever the PE is at the buy point, what I'll do is I'll multiply that by 2.3, and then I'll look at the earnings out, say, the next year or two to give me an approximate idea of what might be possible. Now, that doesn't mean it has to work that way, but at least I have a general idea of what it's possible for that stock to do. But that's how I use a PE. So if the PE is 35 at the pivot point coming out of a base, and let's say the company's going to earn $260 a share next year, I'll multiply 35 times 2.3. That gets me to a PE of 80. Now, if I think they're going to earn $260, then I can project the move out to, say, 208. You with me on this, listeners? And you never, ever want to use a PE to say, well, I can't pay 50 times earnings, or I can't pay 70 times earnings or 100 times earnings. That's just like saying that guy who hit 70 home runs last year, you're not going to pay that guy's salary. So send him off to somebody else and get him off the team because he's just too high priced. So everything sells for what it's worth at that particular time. And what you got to make sure of is that you're finding some stock that truly is worth something and really does have a great product and really does show great earnings and great sales and great return on equity and all these other things. And if you're just listening to some story or some broker or somebody who gives you the name, well, you should buy this because they're going to do such and such, and they're not making any money right now, but next year they're going to do really great. Well, now you're violating all the principles. You might have a good company, you might not. So this CANSLIM method is designed to sort down and give you the highest probability of getting into the very best companies, okay? So you start dealing with the very best companies first, listeners. This makes sense, right? What you're looking for is the very best merchandise, the real leaders. Then all you got to do is look at a chart and see if it's in a buying position or if it's just too extended and you missed it, and now you got to wait for it to build another base and get into another buying area. So we're trying to deal with the very best companies first, outstanding companies. All right, so now that you've got the C and the A, we talked about the N, but the last part of the N is you want to buy the stock when it's close to or breaking into new high ground price-wise. Now, I'm not talking about any old new high. I'm saying as it's coming out of a basing area. When it first comes out of the base and it's emerging and making a new high, that's the safest place to buy the stock. Now, if you're new to this, it doesn't make sense that if the stock goes from, say, 25 to 70 and now it builds a whole new base, and I'm saying wait for it to get to 71 before you buy it, it just doesn't feel right. Your stomach feels funny. You're a little afraid. You're scared. You're having to pay the highest price ever. It just doesn't sound logical, does it? Well, listeners, you got to learn what's correct procedure in the market and stop worrying about how you feel or what you thought in the past. Because how you feel or what you thought in the past probably isn't very valuable. Not in the stock market. Now, it might be if you're an accountant or a lawyer, but not in the market. And the other thing you should get straight is the market doesn't care if you have a PhD from Harvard or anything else. Some people think they're smarter than the market. And you'll find out real fast that the market has a way of tripping you up because it's complex. And you have to understand how it functions and works. All right, let's go to a break. You're listening to How to Invest in a New America with Joe Gilbert. We'll be right back after this break on 1510 AM Financial News and Talk.
Investors, do you know what a successful stock looks like before it takes off in price? Studying models of past big winners can give you a much clearer picture of what to look for in future big winners. Hi, I'm Joe Gilbert, a stockbroker with Newport Coast Securities in Irvine, California. How are you going to know if a stock you're considering to buy right now could be a future big winner if you don't know what these great winners of the past look like? Make sense? Call me at 888-668-9562 for a free copy of my model book I call Profiles of a New America. If you're unhappy with your broker and you want to work with a new broker who has 27 years of battlefield experience, as well as some fresh new ideas to help you get back on track, then call me at 888-668-9562 or log on at howtoinvestinanewamerica.com. If what you're doing isn't working, then try my fresh new ideas and a great new system. And don't forget to tune in every day for How to Invest in a New America from 4 to 5 right here on Financial News and Talk. Newport Coast Securities, member FINRA, SIPC.
Financial News and Talk, AM 1450, KFSD Escondido, AM 1510, KSPA Ontario, Astor Broadcast Group stations.
After 10 years and 2 very brutal bear markets, I believe now is the time to take hold of your financial future and start educating yourself. Hi, I'm Joseph Gilbert, an institutional stockbroker with Newport Coast Securities in Irvine, California, and host of How to Invest in a New America, heard daily here from 4 to 5. Unprecedented volatility has paralyzed investors. In fact, there are millions of investors just sitting on the sidelines, watching as literally a parade of financial opportunities just pass them by. For more than 25 years, I've been actively trading and advising both institutional and individual investors to my techno-fundamental approach. If you're having a tough time in the stock market and you need a new trading partner with some fresh ideas to help you get back on track, then call me at 888-668-9562 or log on at howtoinvestinanewamerica.com. The number again is 888-668-9562 or howtoinvestinanewamerica.com. Call me and let me help you get back on track. Newport Coast Securities, member FINRA, SIPC.
Right. Welcome once again to Invest in New America. I'm your host, Joe Gilbert. I'm an institutional equity strategist with Newport Coast Securities in Irvine, California. Now, I have a free model book, and I'm doing free seminars every Saturday, starting this Saturday. If you like what you're hearing on the show and you want an intro package, you can call my office at 866 668 9562. 866. I'm sorry, it's 888-668-9562. Excuse me, ladies and gentlemen, 888-668-9562. 9562. If you want a free copy of my model book study I call Profiles of a New America, it's nothing fancy for sure, but it's chart models of what some really big winners look like before they had huge price runs. All right, I'm really excited about the stock market. Hopefully you're hearing my passion in my voice. I love helping people gain the knowledge and confidence and helping them go for it. All right, now let's get back into the CANSLIM method that we were talking about earlier. The secret behind why CANSLIM works so well year after year and cycle after cycle is because it's based from studying models of everything that was successful. And Mr. O'Neill took them apart and said, what are all the variables that occurred in these stocks before they had their 5 and 10-fold moves? The things I'm talking to you about today are the things they found out that occurred over and over again, cycle after cycle. The earnings were always there. The sales were always there. The relative strength averaged 87 at the beginning point before the stock took off and tripled or whatever. So I'm talking about historical precedent and facts. At least for me, I just have no interest in a lot of personal opinions, and I don't care what someone on Wall Street says. All right, so that's the N in CANSLIM. Now, I know this is a lot of information, friends, but pay close attention to this formula. I know it can help you to do better in the market. All right, so the S in CANSLIM stands for shares outstanding, supply and demand. Now, in the past, it used to be primarily small companies that would do well because there was a small amount of supply, and it wouldn't take a large amount of buying to run them up much faster. However, the fund industry has grown to where they have billions and billions of dollars, and the country's grown. There's so much money washing around, it's not even funny. So right now, the CANSLIM formula applies to any size capitalization company. All right? It's okay to have big companies, so don't worry about the size. As long as the earnings are there and the sales are there, the margin's there, the group leadership's right, and everything else is there. All right? So that's the S in CANSLIM. Now, the L stands for leader or laggard. You're looking for the leading companies, friends, not the cheap companies, not the value companies, not the laggards. All right? If there are 10 stocks in a group, you don't want the one that's the last one to move up because it's cheaper and you feel more comfortable with it because it isn't so much up in price. All right? The question is, in the industry, which one was the first one to make new highs? And then figure out which one was the second one, and then the third one. And then you pretty much want to forget it after that. You're looking for the leader, the company that's number one in its field. Make sense? The one measure that I can mention that's a very simple way to weed out laggards is relative price strength. So the relative strength is an Investor's Business Daily every single day. If you study all the 500 greatest winners that O'Neill based his research on, what you'll find is that from 1953 until today, at the beginning point, before these stocks had huge moves, the average relative strength was 87. Now that's on a scale from 1 to 99, with 99 being the highest. So 87 relative strength means the stock has outperformed 87% of all other stocks in the market in the last 12 months. So it's not so hard to find real leaders as you might think, friends, if you know exactly what you're looking for, because they're already showing signs that they're successful. They're performing better than the market. So it's not as much guesswork as you might think. Now here's a great rule to live by. It's a simple rule that says don't buy any stock that has a relative strength less than 80, because what you're looking for is a relative strength of 85, 90, or 95, and probably the ones that are 90 and 95 are even better. All right? Many times I bought a stock coming out of a base, and the relative strength was 99. Now, some people may look at this and say, well, if its relative strength's 99, it's already up so much. How much higher can it go? But listen, friends, what that 99 relative strength is saying is that in the prior 12 months, it's outperformed 99% of all of the stocks. And now it's coming out of a base, and it looks like it's starting to go back up again. That's all that 99 relative strength says. So your better companies will have a 90, 95, or 98, 99 relative strength. And you don't want to waste your time looking at something that has like let's say a 60 or 70 relative strength. In fact, one thing you might do tonight when you get home is get your portfolio out and get out the Investor's Business Daily and list the relative strength number for every single stock you own and line them up from the highest to the lowest. And anything that's below 70, you better sit down and look at it very carefully. Look, it may be just fine, but if the relative strength's below 70, it's probably just mediocre. Or it may be in trouble. Because remember, it's an auction marketplace and everything seeks its own level. I don't care if it's Coca-Cola or Gillette or Government Motors. It may have been great in the past, but if the relative strength's now 44, something's going wrong. And there's better merchandise out there. So very few stocks can be good forever. They can be good for quite a while. And then when they start to change, here's another great rule that says when the relative strength's up at 85 or 90, and the first time it drops below to 70, that's a serious point at which I'd probably get rid of it. That's if I haven't already sold it on some earlier kind of rule. Now, in the leader or laggard category, here's some other ways to sort through leaders. Now, what you're looking for is the number one company in its particular field. Mr. O'Neill used to always preach in the seminars about owning the very best stock, the real leader. Almost every single huge winner that he had was the number one company in its particular field. He talked about how he made a lot of money in Price Company that before it turned into Costco. It was the first company in his field to do that type of a concept. And it was back then the earnings were growing at 50% and that return on equity is 50%. And it was a leader in that concept at the time. The guy who started Costco actually left Price Company and went to Seattle and started Costco. But it was a leader at that time. When he owned Amgen a number of years ago, it was the first, when it first developed Neupogen, it was a leader in its field. It was a leader of biotechs. The earnings were growing faster. The sales were growing faster. They had new products. The price action was better. The relative strength was better. Everything was better. So, ladies and gentlemen, you can sort through leaders with a lot of these numbers and measurements that I'm talking with you about today. The question is, out of the industry, is this the real leader? All right? Are they gaining market share? Have they got some new product? Are their sales up more? So you want to compare all of them and forget about the PE ratio. If it's the best company, it's going to have a higher PE, right? You don't pay the best ball player the lowest salary and the worst one the highest. So you just want to line them up by their PEs, and probably the higher PEs are among your better stocks, and the lower PEs, well, there's something wrong with them. All right, so that's the leader or laggard. Remember, 87 was the average relative strength, and you can sort through what the company's position is in the industry. Is it a leader? Sometimes the leader will go up 3, 4, or 500%, and the number 4 or 5 company only goes up 15 or 20%. But it's really comfortable when you're in the fourth or fifth stock. When you're in the leader, oh man, it's way up there. It scares you. You don't want to pay that price. But you'll buy this one over here because it hasn't moved yet. It's a real value. It's only 22 times earnings. It's a dog, friends, and that's why it hasn't moved. You think the market isn't very smart? The market is very smart, and there are some really sharp people out there, and they know what the best company is, and they're in there buying the heck out of it and running it up. And the other one, why is it just sitting there? Well, that's because they don't want it, okay? So the I is institutional sponsorship. Now, this is absolutely critical. You follow every single item in CANSLIM, right? Don't try to redo the system because every single item was done through research of how these successful stocks work. And you don't want to leave anything out. The few things you leave out may be the reason you're not going to get the kind of results you want. Right? Institutional sponsorship is critical because it's an institutionally dominated market. 80% of all the activity in these stocks is institutional buying. Now, I know you got your day traders and your internet traders and these other things and the high frequency guys, but there's nothing that compares to anywhere close to the fact that somebody out there is sitting with $100 billion. And if they decide they want to buy a 1% position in that stock, the stock's going to go up. Whether they're right or wrong, it's going to go up. Now you can sort through charts and look for the ones with the best earnings and the best this and that, and you see the volume and the demand coming in, and you put that all together, and you give yourself a huge advantage so that you should be buying along with the institutions. And don't kid yourself and say, now, I'm just going to get in before the institutions. Guys tend to think they're smart, and they just try to want to pick up on these things before the institutions get in. I've got this great story and everything looks good, so I'm going to buy it. But the institutions haven't really gone in yet and bought it. Well, you might get lucky every once in a while, but you need them in there buying and buying and buying. Now, have you ever thought, let's say, what's 1% of $1 billion? Excuse me. Let's say you got a stock that's $50 a share. How many shares are you going to buy? All right. Now, you do the math. Listen up, friends. It's a ton of stock. So how do you think it's going to take them? How long do you think it's going to take these institutions to buy that stock? If the general market's been, say, weak for 6 or 8 months and suddenly it turns up and now they want to buy this stock and they want a 1% position, they've got to buy 200,000 or 300,000 shares every day for the next 2 months. How do you think the stock's going to act? It's going to go up today. It's going to go up tomorrow. It's going to go up the next day. It's going to go up for a while. Now, it might come off for a day or two, and then it'll start to go up again. Another day, because they're in there buying 200,000 or 300,000 shares every day for the next couple of months. So it only makes sense that this is the kind of support you want in the stocks you're buying, right? So you buy a few hundred shares or whatever, and they're in there buying and buying all the time. All right, listen, so sponsorship is critical. Now, there's several great funds highlighted in Investors Business Daily every day, and it shows their top 10 or 20 positions. It shows the new positions they bought, and there's a feature in the paper that takes all the positions or all the best growth funds that are B or better and shows all their new positions or the things they added to in the last quarter. This is a perfect list. All right, go take a look at that list and watch all those charts, and one day you'll see a perfect chart pattern coming out on one of those that has all the numbers. But those are the smartest people in the country, and those are the things they've been buying. So with sponsorship, you always want to make sure you have at least one or two of the better funds that have been buying the stock recently. All right, let's go to another break. You're listening to How to Invest in a New America with Joe Gilbert on 1510 AM Financial News and Talk. We'll be right back after this break.
Investors, do you know what a successful stock looks like before it has a dramatic rise in price? Knowing what to look for can definitely give you an edge. Hi, I'm Joe Gilbert, an independent institutional stockbroker with Newport Coast Securities and host of How to Invest in a New America. For nearly a quarter of a century, I've focused on a strict discipline of looking through thousands of stock charts every weekend looking for timely ideas for my clients. If you believe in the importance of a disciplined approach that combines new ideas managed with passion and focus, then call me at 888-668-9562 and experience true full service at very reasonable rates. Again, if you're looking for a new broker who can help you navigate the ups and downs of the market and you want experience, discipline, passion, and focus, then I'm your man. I've been using one system for 26 years. That's more than half my life. My direct helpline is 888-668-9562 or log on at howtoinvestinanewamerica.com. I'm Joe Gilbert, encouraging you to get educated and go for it. Securities offered through Newport Coast Securities, member FINRA, SIPC.
This is Financial News and Talk.
Markets, business, and the latest information. On Bloomberg, there's absolutely no alternative.
AM 1450, AM 1510.
Investors, do you know what a successful stock looks like before it takes off in price? Studying models of past big winners can give you a much clearer picture of what to look for in future big winners. Hi, I'm Joe Gilbert, a stockbroker with Newport Coast Securities in Irvine, California. How are you going to know if a stock you're considering to buy right now could be a future big winner if you don't know what these great winners of the past look like? Make sense? Call me at 888-668-9562 for a free copy of my model book I call Profiles of a New America. If you're unhappy with your broker and you want to work with a new broker who has 27 years of battlefield experience, as well as some fresh new ideas to help you get back on track, then call me at 888-668-9562 or log on at howtoinvestinanewamerica.com. If what you're doing isn't working, then try my fresh new ideas and a great new system. And don't forget to tune in every day for How to Invest in a New America from 4 to 5 right here on Financial News and Talk. Newport Coast Securities, member FINRA, SIPC.
All right, I'm back with you again. Now, I want to offer to all my listeners, all right, I have a free model book study I call Profiles of a New America. All right, it's nothing fancy, but it's chart models of what some really big winners look like before they had some huge price runs. Right? You have to study models to ingrain in your mind what a successful stock looks like. Do you know what a successful stock looks like before it has a major advance in price? If you don't know what the past big winners look like and what were the common factors that occurred over and over again, then call me at 888-668-9562. Again, my office number is 888-668-9562. Or you can log on at howtoinvestinanewamerica.com. Again, howtoinvestinanewamerica.com. But how are you going to know if the stock you're considering to buy right now is a future big winner if you don't know what these past big winners look like? Makes sense? So where do you start? Well, in William O'Neill's book, How to Make Money in Stocks, he points out that secret tip number one and the first step in learning to pick big winners in the market is to study the leaders of the past, to learn all the characteristics of the most successful stocks. Listeners, studying models of big winners is critical. Chart patterns repeat themselves, and by studying the models, you can clearly see that they all have very definite and recognizable chart patterns. If you have an overwhelming desire to improve your stock market performance, I say go for it. You can do it for sure. Perseverance is the key. Now, if you've been getting roughed up, go get the book, How to Make Money in Stocks, A Winning System in Good Times or Bad by William O'Neill. Again, if you've been having a tough time in the market, go get the book, How to Make Money in Stocks, A Winning System in Good Times or Bad by William O'Neill. The book is the basis for all the information I'm going to talk about here every day on my show. And so if you get the book and you listen to the show, you can call me and get your questions answered right here on the show live. And hopefully I can help you to accelerate your learning curve. Wow, it sure feels good to be back on the radio. You know, I've been a stockbroker for 27 years now. That's more than half my life. I started back in January 1987, and I'm going to be talking to you every day about educational information, professional information that can help you to improve your investment results. All right, I've spent over 10,000 weekend hours alone looking at stock charts, and I learned very early in my career to use a sound method. In fact, from 1989 till 1997, I attended more than 20 Investors Business Daily Advanced workshops that were all taught by William O'Neill and David Ryan. And I can't tell you how much I learned in attending all those workshops, and I've spent my entire career trying to continually improve on my weaknesses. All right, if you're looking for a new broker, maybe your broker's not working out for you, and you want to work with somebody that has a system and experience and that uses passion and focus, you can call my office at 888-668-9562 or log on to my website, How to Invest in a New America. All right, that's all I have for you today, folks. Join me again tomorrow from 4 to 5 and every day for How to Invest in a New America with Joe Gilbert right here on KSPA 1510 AM Financial News and Talk.
After 10 years and 2 very brutal bear markets, I believe now is the time to take hold of your financial future and start educating yourself. Hi, I'm Joseph Gilbert, an institutional stockbroker with Newport Coast Securities in Irvine, California, and host of How to Invest in a New America, heard daily here from 4 to 5. Unprecedented volatility has paralyzed investors. In fact, there are millions of investors just sitting on the sidelines, watching as literally a parade of financial opportunities just pass them by. For more than 25 years, I've been actively trading and advising both institutional and individual investors to my techno-fundamental approach. If you're having a tough time in the stock market and you need a new trading partner with some fresh ideas to help you get back on track, then call me at 888-668-9562 or log on at howtoinvestinanewamerica.com. The number again is 888-668-9562 or howtoinvestinanewamerica.com. Call me and let me help you get back on track. Newport Coast Securities, member FINRA, SIPC.